Indian economy and Indian banking landscape is going through some very, very interesting times, and steering those changes and getting the NPA mess resolved is the man leading the charge from the front, RBI's Deputy Governor S.S. Mundra, in conversation with us right here at ET Now. Thank you very much for speaking to us, sir. You really are the man of the moment, as they say, in the thick of the action. There are many terms that are being described to doing what you're doing right now, which is a massive cleanup, the war against bad loans. You've identified 12 cases to begin with. It has been referred to the IBC. My question really is, what kind of resolution are you expecting on this front?
First of all, I think let me start with your analogy as far as this act is concerned, and as you mentioned, I think there are main characters who are different. If I pick up movie of an analogy, we from here are more like the character actors. So we are doing the
modest.
We are doing the role of character actor. Anyway, on a serious note. You see the process which was followed and the account which were picked up, all those are already well known. I mean to say RBI has already issued a fairly detailed communication about that. The cases are now under the newly established IBC framework.
That's right, yes.
And as you know, this framework has a definite timelines within that. So, when you go by the timeline and when the cases are admitted at the NCLT level, and then the clock starts ticking, so that there is a time of 180 days. Within that, the appointment of insolvency professional, forming of the creditors committee, they coming out with the roadmap, all those things are quite well laid out and prescribed. So, that being the case, we expect that it should move along those timelines and move towards the final outcome. Having said that, yes, as we know, this is a new structure, and while few cases have already been referred to NCLT in past by the different groups which are entitled under the law to make such a reference. But I think as it happens with any new structure, there could be initially, it's quite possible that it may be slightly slow in taking off. There may be some of the dimensions which we will know only when this actual gets into the play. But my sense is that is but natural with
the initial
any
teething troubles
structures. Yeah, but the good part is, even if you take one case and any of such things are happening, and once those things are sorted out, it already paves the way for all other cases which are coming. It becomes like a,
I understand. It's an example that can be followed.
Yeah.
But I understand your teething troubles, argument, and I will come to that in just a bit, sir. But I do want to ask you, what kind of resolution are you expecting? Because some experts are of the opinion there that India is a capital scarce country. Is it right and wise to liquidate what are perhaps, capital assets in the first place? I mean, liquidation is, I understand, the right way to go forward in the wisdom of the RBI and the government, but should it not have been the last resort absolutely?
I think interesting question, and you are very right about it. So, first let me come to the first part of it, that whenever this kind of stress situation is there in the economy, ultimately the efforts have to be revolving around two fundamental the points. One is banking system should be rescued from this stress as early as possible. But at the same time, echoing exactly what you are mentioning, that to the extent possible, the productive capacity in the economy should be preserved. This is how it should be done.
That's right, yes.
And that is where, if you look at the history of past couple of years, or even going back a decade when the CDR was put up. So, CDR, or whether it is SDR or S4A, all these mechanisms are devised from that purpose.
That's
only.
right, yes.
That you are not, bringing down an enterprise just for the sake of it. And again, believing that a reference under IBC or to NCLT means liquidation only is not a right thing to believe.
Okay.
Liquidation is the end point. When the creditors committee is formed, they have all the options available. all the options available to restructure, to look at the possibility of even the say merger, the change of management, you know, all kind of possibilities are there.
So if I may just intervene, sir, at this point in time, what you're essentially suggesting here is that for the 12 cases that has been referred, it is not the end of the road for those companies, those projects or those promoters. What you're saying is that from now to the 270-day window that they have, or maybe more due to the teething troubles, there could be other provisions. Do you believe that some promoters may actually get to turn around and preserve their business? Is that what you're suggesting here?
What is important, whether the business is preserved, whether the after the preservation it remains with the promoter or it remains with the entire other entity, those are the matter of details and those are the matter of developments as they will develop. The key point is, to the extent possible, the enterprise, if it is preserved, I think there is a good outcome.
But as the Deputy Governor for RBI, who's responsible and looking into this and leading the charge, like I said in the first place, are you of the opinion that liquidation should be the last resort, and you know, whether it's a merger, whether it's preservation, whether it's turning around, those options should be exercised first?
No, not should be, it is. It is in the structure.
How confident are you that a lot of these cases will not end up in liquidation?
See, now as said, too early, and it is just the first reference, but if you hear whatever is being discussed in the economy around you, it's quite possible. I would be fairly hopeful that the various kind of combinations would crop up, and there may not necessarily that there may be a need that any of these enterprises are put to liquidation. But be very clear, liquidation, see, even in all the instruments which were introduced by RBI, liquidation was not the
That's
idea.
right, yes.
And even now in this, liquidation is the last point. If after giving all the time which is prescribed, if nothing happens, only then company goes into the liquidation.
You know, sir, I know the RBI hasn't released an official list of names that have been referred, but there are many out there in the public domain, and big steel companies, whether it's SR, whether it's Bhushan, whether it's Monnet Ispat, Electro Steel. All I'm trying to understand from you is that one common link amongst all of these cases is perhaps a promoter-driven company, and promoters like to hold their assets very close to their heart. How tough is it going to be for the committee to convince promoters to part with these assets? Is that going to be a big challenge according to you?
Anyway, first of all, I really would not like to go into the individual names.
I understand, yes.
As the one thing. Second, forget about the 12 companies or anything under reference. If you look at the corporate sector, even otherwise in India, is largely promoter driven.
That's
so,
right, yes.
so is not any exception. I mean, that's the kind of model which has developed, and that is the kind of model which is existing at this point of time. So, but the key point is, it is a legal framework which is in existence. So, I don't think it is a question of choice for anyone, that whether I want to, he or she wants to cede the control. It is there is a prescribed mechanism, and it would need to be done.
Fair point indeed, sir. If I may also ask you at this point in time, because liquidation is the last option, and you're right, the government and the RBI and the committee will perhaps together see if the asset can be preserved. Maybe a change of ownership may happen, but still be preserved. I'm keen to know, how confident are you to find buyers for assets when they will be liquidated? Because a lot of market men or a lot of participants in the Indian economy believe, for instance, the Kingfisher Villa or the Vijay Mallya's house was put up for auction 4 times, didn't really find takers. How confident are you of finding buyers for these assets?
See, again, if you are talking about a particular instance or sale of
I'm just quoting that instance.
No, what I meant to say, sale of a particular asset, that is more in nature of liquidation.
That's right, yes.
Right.
Yes.
And what we are discussing about the resolution, which generally would mean that the enterprise in its entirety and as a functioning going concern, it can be taken up. My sense is, learning from the experience which we have seen even with the other instrument in past some time, there should be reasonable interest, and I think there should be quite a few players which should be available in the market. I think question at some point of time was about the right price and the right processes, which seems to have now come with this structure.
I understand the right price, and this is perhaps the most transparent way to go forward. So many people are congratulating both the government and the RBI on this. But I think a few people are also asking the question that if liquidation were to fail, if you do not find buyers, what is your plan B? Do you have a plan B? Because the NPA situation is something that you would want to resolve. At the earliest, it has to be in the interest of the Indian economy. So is there a plan B that the RBI has?
No, no, I think within this there is a plan A, there is a plan B already. So, plan A is the resolution and plan B is the liquidation. So, I think it would be, see, any new structure, you will find that either there would be few people who are on the optimistic side,
That's right.
too much optimistic,
And too
then there will
pessimistic.
be two people who will be too pessimistic or skeptics. I think what is the right way is to be more realistic. And if I think as a realistic, I don't think that there is a need to believe that there won't be enough interest or there won't be enough player. And as I said, plan A is there, plan B is there. I think let's give it some time. Let's see how the things are progressing, rather than start thinking
So you're arguing on the side of the optimists right now. Let's hope that things will carry on. But what if? But realistically, yes. But what if you do not find takers? Because I'll tell you why that. So a lot of market participants that we spoke to before this interview, they are worried that, you know, what if things get stuck at the legal level? What if there are not enough takers? They're also a little worried about, you know, what if lingers on for too long? So then, what is the plan B to resolve this?
No, that's what I said.
Yes.
I think these are two separate issues. One is what lingers, legal issues and all that. That is something we dealt with in your question 1.
That's right, yes.
That initially there may be some of
understand,
this kind
yes,
of thing and some of the, you know, delays. But once those are sorted out, actually that becomes clear for all subsequent cases. So that's the one part of it. Now, just theoretically, if I, you know, since you are insisting on
I'm trying to get a headline out of you, which is doing my job.
an answer from me. Ultimately, if it is plan B and if it is liquidation, and let's say what you are that even at the liquidation normally means sometime it may be even disposal of individual assets.
That's right, yes.
Right.
Yes.
So, at the disposal level, what ultimately can happen that an asset is liquidated or sold at a price much lower than
That's right.
the price.
Right.
So, now to believe that even at that price, there won't be a buyer. Even if it has a scrap value and sold by weight, then there would be a buyer. So, in that case, that would be the liquidation, and whatever is the resultant loss is there, it has to be borne by the people.
Can I indulge you and ask you a more philosophical question? If we get to the stage, or if we do liquidate assets, the liquidation will always happen at a lower level. Both you and I know that buyers will want to get in, try to get in maximum value from the deal. The philosophical question is, you know, should the government or the central bank or even lending institutions be a part of, I mean, you know, be looking at liquidation at all? Who does liquidation help at the end of the day? It helps, it doesn't help the bankers, it doesn't help the borrowers, and certainly doesn't help the economy.
No, very fair point, and that I think that is what you should appreciate, that no one has looked at liquidation as the
Ultimate
first,
goal, yes.
ultimate, not even, you know, first solution. And that is why, which I mentioned, if you look at the last 2 years, why all these structures, why all these instruments were given, just for that situation only. I think is the last resort, a scenario which is unlikely to happen, but since you are insisting that we should look at all possible scenario, if it were to happen, then what can, what could be the outcome? That is what I was trying to explain. And there also, understand if it is a large market and there are many players. So, that competition also ensures that while it may not be a fabulous price,
That's right.
but it cannot be really a throwaway price.
Indeed. I will take a very quick question. You've referred first 12. The idea is to do 60, about 50, 60 of those accounts. When do we see the next batch being referred?
I think the first communication was very clear from RBI that 12 cases presently banks have been asked to refer,
Right.
and for all the remaining cases they have been given time of 6 months to themselves come together and take it to logical end. So, I think immediately there is no need for anything else to be done.
The RBI communication was also very clear on provisioning norms that will have to change with this,
Yeah.
because obviously, businesses will need a lower interest burden, and which is where provisioning norms will have to change. Can you expound upon that a little, and also capital requirements, because of the provisioning norms that changes as well, and most public sector lenders are starved of capital.
See, as far as the first part is concerned, as has already been mentioned in the communique, that the concerned department in RBI is working on it, and you will get to know about it once the final outcome is available. And you must have seen right from the beginning of this process, RBI has been quite regular in conveying
That's right.
to the
Yes.
market. So wait for that. You will get to hear when this work is completed. That's the provisioning part. On capital, yes, no denying the fact that when all this happens, whichever way you look at it, whichever way it is done, it will entail the requirement of capital. And I don't think that is a very complicated maze which is not understood. This is fairly understood by all that it will entail the capital requirement.
So when it entails the capital requirement, reportedly the government and the RBI are in talks to defer the Basel norms as far as capital requirements are concerned. What is the RBI's present position on that? Because there is a lot of capital requirement up until 2019 on this, about 5 lakh crores for the entire
I am not aware of any such discussions which are happening, or if there are any definite.
But
views
what's
on
your
that.
view? Do you believe a developing economy like India, where there are bad loans that have saddled on the books of banks, perhaps can take leave from the Basel norms?
I can only say that the structure which is in place as of today is the operating structure until and if it is changed.
But do you believe there is a case to change it? Given I'm not asking you this question to get a headline, sir. It's because we are a developing economy. We have just been hit by an NPA mess. The banks have a capital requirement. Given that scenario, can we take a leave from there? Because the counter argument to that is it hurts our credibility. So I'm just trying to ask how a central banker balances these two arguments.
I think these things have evolved over a long period of time, and we have remained adherent to the large part of it which is already behind us. So probably it will be a good idea to stay on the course.
I have two very candid questions to ask of you, and I'm hoping you will answer both of them. The first is, did demonetization delay the whole NPA war? Or was it a distraction of any sort?
Anyway, first thing, so I have been, I think so far also I have been very candid in whatever I am replying.
Absolutely, you are. I'm just saying, I'm asking you a more controversial sort of a question here.
No, but see, there is no direct, impact of each other. Demonetization, of course, this was an activity which was taking its own course, but I don't see any correlation in a way that it would have delayed the NPA resolution or whatever is happening on the NPA front. I think it was well on course.
But don't you think the banks would have been distracted dealing with demonetization at the same time trying to get the NPA in control?
Even in normal time, let's say demonetization is an activity which is concerning more the currency area of the bank. So at any given point of time, even those are the separate pools of the expertise and manpower which deal with the individual issues. So it will not be right to believe that each and every single individual in the organization was caught into the demonetization and all other activities were put to rest. It doesn't happen that way.
So I will ask one more question on NPA before I move forward and obviously cover more ground on PCA and all of that. The RBI is one such regulator that appoints its members on the boards of these banks. There is an on-site inspection that happens by these banks. Some people are asking the question that why did the regulator that was present by its representatives on these bank boards, or why did the bank boards not raise the red flag on NPAs? Is this an exercise that's happening a little late, and where does the buck on this stop then?
No. See, again, there one thing is hindsight is a very beautiful thing, and with hindsight, all expert comments can be given. So I have nothing to comment on that. No grudge also on that.
That's right.
Everyone is entitled to the opinion, but See, if we see the evolution of stress asset in the banking system is a long discourse, but I think it had been a combination of several factors.
That's right, yes.
Including whatever has happened in the external world, whatever has happened in our own universe and the policy issues. Also, of course, some of the acts on the part of promoters, some of the oversight which could have been better on the part of banking system. In a running organization and day-to-day business, when it is conducted, things look different. When everything is aggregated and you have passed the passage of 2-3 years, you reflect back that you have the benefit of hindsight. You have the benefit of hindsight and you aggregate everything. I think the perception can be different. So, this will be an endless debate. Important point would be to learn the right lessons from this and ensure that the same things don't get repeated going forward.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.